Hello everybody, today is June 14th, 2023, and this is my experiment investing in several different cryptocurrencies and $1 a day in several different dividend stocks. Now the reason why I'm saying several is because a lot of things are having to change here. One thing is Robinhood made this 24-hour market for several different kind of stocks like Tesla, Amazon, Microsoft, and those type of ones can now do 24-hour trade. But the thing that really has changed here is if I come over here and click on ADA, it looks like that Robinhood is now removing ADA, Maytech, and SOL from the cryptocurrencies options to be able to sell and buy and trade them. So what this is meaning is that on June 27th, 2023, they're going to force sell my cryptocurrencies. Now I was trying to do a whole bunch of my own research and trying to figure out if I could still do tax loss harvesting on cryptocurrencies, and the answer is yes, you can do tax loss harvesting on cryptocurrencies. Now, I'm not a tax expert. I'm just telling you based on my own research. There's a lot of skepticism on how it all particularly works, but there are some official rules when it comes to selling and trying to get tax loss harvesting. One of those rules is you has to be 30 days before and 30 days after to not buy any like or similar type of cryptocurrencies, or in that particular sense, or type of options. Now for stocks, it's very well defined where each stock is its own, but cryptocurrencies is not defined very well, and so it's all up into interpretation on the tax laws. So for example, when I was trying to think of this, if I were to sell off my ADA today at this loss for $43, and also when I also identified this, you can see here when it dropped, I saw it right here and I was like, I don't want to sell right there, I want to wait for it to come back up so I don't get so many losses. But I wanted to do tax loss harvesting, so I wanted to pause all my cryptocurrency buying for at least 31 days so that I could do the wash sale. But the part that really hits me right there is the 30 days before. And I have been purchasing $1 a day in each one of these cryptocurrencies. So it may still trigger a wash sale, meaning I don't actually get my tax loss harvesting and can put down that I lost $43 if I were to sell this right now, or lost $16 if I sell this right now. Now the part that's really up to interpretation depending on who, the IRS or whoever it is that comes in and actually audits or looks at when you submit your IRS taxes, is if I were to sell ADA at a loss, and if I was within the 30 days before and the 30 days after, so I wait 30 days before I buy any cryptocurrencies, if I still kept buying Bitcoin, is it a like or similar currency or similar type of asset in that particular aspect? That's up to maybe interpretation, and it could be whoever is filing or looking at it. So what I was trying to think of, and I was trying to think of this way, and I could be wrong, this is just up to my own interpretation of reading those laws. If I were to sell ADA but still keep buying Bitcoin, that would trigger maybe a wash sale. So what I was thinking of doing is I was turning off all my cryptocurrencies. I was going to turn them all off and not invest any in cryptocurrencies for up to 31 days, and then start purchasing again after 31 days and sell all these at a loss, because I'm being forced to sell them on the 20th, 27th, because of Robinhood is forcing to get rid of ADA, MATC, and SOL right here. I'm being forced to sell them. I have no other option. I mean, the other option I could be is I could transfer these coins out to another type of platform. If I wanted to, I could send it off. I don't really want to do that. I want to just get rid of these particular ones in that aspect, and I wanted to do tax loss harvesting and be able to get it up to that point. But my concern here is the 30 days before and the 30 days after, and also if it's a like type of asset. So I was trying to think of how are the ways I can mitigate a possible wash sale, meaning I don't get the tax loss harvesting, so I get billed with a higher tax bracket. Now, two that I have completely stopped is AAVE and Comp. These would actually be safe to sell right now, so I could sell AAVE and Comp because I have not been purchasing those within the 30-day window before and the 30-day after. But the ADA one, I have been purchasing $1 a day every single day, and that's the 30 days before period for ADA, Maytech, and SOL. So I'm thinking maybe I won't be able to do it, but I'm still gonna do my idea because I'm forced to sell it. June 17th, and I'm willing to stop all these assets, to stop buying them for 31 days at least from this time period. I'm considering selling them today or tomorrow or sometime. I'm going to sell them all at a loss. I'm going to wait the 31 days for all my cryptocurrencies, and then I'll start buying in at $1 a day. And then when tax time comes, I'll either see if I can do my tax loss harvesting on the ones that I'm forced to sell, or maybe I just have to eat the loss all in total because I've been purchasing $1 a day before in every single one of those. So that's up to interpretation. I'm not a tax expert. I'm not a financial advisor. I'm just saying that is what I plan to do, to see if when tax season comes, if that really works that way, if it doesn't work that way. And then even then, when I submit it, it's whoever's actually reading and reviewing it up to their interpretation, because the tax laws around cryptocurrencies is so vague that nobody really explains it. And I've read tons of different articles. I was doing different research. I even asked AI, and I asked all these different things, and each one gave its own different opinion of it. So, but what is a solid fact is 30 days before, 30 days after, and if it even applies to cryptocurrencies, because even some articles are saying that, oh, wash sale doesn't even apply to cryptocurrencies. You can buy and sell it. Don't be safe. Go to the most extreme in your sense if you even plan to think about any of this. And again, I'm not advising you to do this at all. I'm just saying this is what I'm going to do. This is my own opinion. That's my plan. And we'll see how it works out when tax season comes. And even then, even after they do it, and if I get one benefit or don't get a benefit, it's up to interpretation for each state, for each law, for each whoever is even looking at it, and it's up to them how they read it, because it's just so vague in how it's read and how it's interpreted. Now, that being said, that's the cryptocurrencies, and that's the state that that's in. Now, if I come over here and I look at what I'm doing here, this is where emotional competency comes into play, and something that I did that's absolutely... So you can see right here, I've invested an extra $2,000 in UAN, and you can see right here that it heavily started going down. Now it was going down, I was like, oh, am I emotionally prepared for it to just drop? And it just plummeted, and I was losing hundreds of dollars at the point because I put $2,000 in, and it just dropped and dropped. Now what I did do is I started incrementing and changing how I bought in, because you can do limit orders. So when I say over here limit orders, if I come over here, you can see I put a limit order saying I wanted to purchase at $84.50. And I was incrementing down as I was purchasing. So I was doing a trade, and I was buying, and I was going over here, and I was changing limit order, and I was putting it in. In this case, I was doing like $83.50, and I was buying down. But since it's at $81, in this case, I would probably do $79.50 in that particular sense. And I would hit continue, and I would do, okay, market hours only, so I don't get any extra fees for extended hours. And then I hit continue, and then I would say it was good for 90 days, and then I would hit continue, and then I say how many shares I want, and I say I would want to buy at least 3 shares of UAN at $79.50, and I hit review, and then I submitted it. Now in this case, I'm not buying anymore at this point. I already invested a whole $2,000 in there, and I'm taking this risk at a much bigger, higher risk. I know there's a huge risk. I know that it's probably not going to pay another $10 dividend, or whatever type of 10% type of dividend for Q3. I know that fact. And I also know the fact that I was realizing that it was going to drop down. That's why I was incrementing and buying down lower. But I'm not trying to tell anybody to buy or sell. I know that this right here, this I consider as a gamble. This is a gamble for sure. Because it's not, all the research I did, it's a gamble in a sense that for long term, is it a profitable company? Maybe. In the short term, yes, it's paying high dividends right now, but in the long term, historically, they have shown to even cut their dividend completely. So the 5-year period right here, they completely cut their dividend, and then they halved it. They had to split it because they were not profitable. But this only changed only because all the resources changed. And then there's a whole bunch of controversy as well between Russia. If Russia opens up and be able to sell all of their fertilizer again, there's that huge stockpile. So these prices may plummet again. And so there's just this huge of, is it a risk? Maybe. But then there's also the assets, or in that thinking of the sense of here in the United States, maybe we want to keep everything in-house, keep fertilizer in-house, and maybe it can keep going. Now, as far as their books and everything, they have enough money to pay all of their loans and everything that they're in right now. But will they pay another $10 dividend in Q3 or another $10 dividend in Q4? Very highly likely not. But I'm looking at this there for a long term in that sense. Now, as far as a growing dividend stock, you can constantly see right here, it's been constantly trending down. They only spiked up just before they pay their dividend, and then after the dividend is paid, then people sell off their dividend, the stock, and then right before the dividend pays out, it spiked up again, and then it goes down. So it may spike up again just before they pay out their dividend, or it may not. It may plummet completely down. So that's the risks I'm willing to take, and I put a whole bunch of money in, and I thought, okay, I'm emotionally ready, prepared for it. But let me tell you, when you start seeing your money start going down and just plummeting like that, you start thinking and second guessing yourself. Be like, oh, did I make the right decision? So a lot of emotional just spent on. I dumped in a lot of money, and it's a newbie mistake. I even read, I researched, I even knew it was a newbie mistake, but I was doing it anyways. Dumping a ton of money into one asset or one stock and not dispersing it out equally is a way to, and you have to have emotional content in that sense of, can you do, and will you actually be able to stabilize your emotions to do it? For me, I'm even was going to do it even a bigger gamble. I'm still waiting for, because I was going to dump a full $10,000, and I was like, oh, it's, it's $10,000. If it's $10,000 and $10,000, and if it's a big if, I already know that it's most likely not. If it pays out another $10 yield, $10,000, I'd make $1,000 in dividends. Whoopee is what I was thinking, and I'm still thinking that. I'm still thinking of dumping $8,000 more in, but I'm doing it more cautiously. And if I do buy in, I'm no rush right now. They're not going to pay out another dividend until August. So why rush to buy in right now when I can buy in at much lower? And if I buy in much lower, then when it's up, I make a possibly more profit. Again, that point is gambling, but I'm playing it on a harder mode. Think of it as a game. Money I put in, it's gone. It is gone. It's going to be gone in that sense. And also all the taxes. Now that I learn more about tax loss harvesting, the rules around it, I'm not 100%. Don't listen to me. Do your own research. There's so many different articles. Talk to a tax law expert. Talk to a financial advisor. Get the true meaning of it, because I don't know your situation. Talk to them in your own state, in your own situation, or wherever you're located, because my information that I did for my own research is for me and me alone, for where I'm located, and for you it is completely different, so the circumstances would be different. So talk to an actual expert. I'm just going based on what I know and what I've read and what I've researched. Now a whole bunch of these other ones I'm doing $1 a day, $1 a day, and so that's how that is playing out right now. Today is Wednesday the 14th. The Fed is either going to pause interest rate hikes or they're going to increase interest rate hikes. Those are the only two real possibilities as of right now today. They're going to announce it around 1 p.m., 2 p.m. Eastern time sometime today. And when that happens, we are going to see either these jump up or jump down. But right now, everybody right now is thinking that everything is hunky-dory. But if you look at the world, I'm still expecting something to happen. I don't know what's going to happen, so something's definitely going to happen, whether things are going to spike up, spike down. And that was the other reason why I bought in so fast with UAN as well. It was like, okay, maybe it's going to spike up, because I was watching things spike up in that sense. If you look at the 1 week period, you saw I was around here, and I was looking at it, and it was going up, and I was like, oh, okay, I better buy in some before it goes up too high. And then all of a sudden it just plummeted. Part of probably because I started around the same time. Normally when you start buying and you're forcing the prices to go down, it goes down, because the volume is not traded that much, and I was forcing some of it to go down in my aspect, but I'm expecting it to go back up at some point. So that is that right there. The other thing that I was thinking of doing is, because I'm really interested in tech, and I'm really big into Microsoft, Apple, and NVIDIA, so tech, media, and telecom. And that's why I said in the beginning of this particular video, because I was always so solid, I'm thinking of doing Apple, Microsoft, and NVIDIA. All of them are doing their own AI. A lot of the people are saying, and you can see right here, the 1 week or even the 5-year period, it's been constantly trending upward. It is a good, solid company. Warren Buffett was even mentioning as well, don't just go in and buy junk companies. Buy a company that's going to last a long time. They don't pay a high dividend yield, but it's a company that's probably going to last for quite some time. And even the analysts say, it's probably a good company to buy in. Now, if we come over here and look at Microsoft has shot up a significant amount. And if I had started back in January 2023, where is it? January 2023. Right here, it would have been not bad, because it also spiked up too. And I was totally considering, and should have, but then I looked at the dividend yield, and this is where you say don't chase dividend yield. chase good company, good solid companies that you believe are going to last for many years if you're going to be a dividend investor or any type of investor. Look at it for the long term. Don't just look at the now and the short term. Look at how is their future going to play out. And I see Microsoft being there. Now, the main reason for NVIDIA is I use graphic cards. I'm a big gamer. NVIDIA also has been, and you can see the 5-year period, constantly been growing and shooting up. So that is something to consider, something to look at. I want to be in the tech industry. I want to be in the part of AI. I believe in a lot of things going, even meta platforms. So there's a lot of different things that I'm considering investing in. The dividend yield is low, but for long term, doing $1 a day in each one of those, probably not a bad idea. But for right now, I wanted to take a risk. I'm taking that risk. I can, $10,000 is a lot of money, but I want to dump it into something at a high risk. It does have a high dividend payment as of the last 2 quarters, where they did pay the first quarter $10, and the second quarter they did pay $10, but this third quarter that's coming up, I expect it to be down. Who knows what the profits be? They have possible potential, but they've had a bumpy road in the past. They stopped their dividend yield. They were up before. If you go even back further in history, they were up before, and then they started going down, just like how they're doing now again. So we will see what happens, but that's just my plan. I'm not telling you to buy or sell. In fact, I'm even warning you against stuff. If you put money in this particular dividend stock, expect for the short term at least, to lose money. Expect to totally start losing a lot of different money, in my own personal opinion. That's what I expect to happen. But in the long term, maybe it will make a little bit more money for me and pay out, at least even if it's just a 20%, even if it's just a 10% dividend yield for the year when it changes, it still will make some amount of money in that particular aspect. If you enjoy this content and you've been here this long, you've been watching my videos, thank you so much. Feel free to smash the like button, leave me a comment, tell me what you like, tell me what you don't like, tell me if it's a good idea, bad idea in your own opinion. Tell me what you think. If you want to be notified, feel free to subscribe. If you don't want to subscribe, that's okay as well. Come back once a week, once a month, check out how I'm doing, check out how this is going. Thank you all again for being here again, and you all have a wonderful rest of your day.